So thank you everybody for joining us for this Payment and Taxing for Online Marketplaces webinar. I'm your host, Tom Gatos of McFadyen Digital, and I'll go over the purpose of this webinar, some of the things we're going to cover, introduce you to the speakers, and then turn it over to our experts. So what we're going to do today is we're going to go through, like I said, the introduction, the speakers, and the topic. We're going to take a look at the marketplace architectural approach and some of the considerations around marketplace and differences from marketplace model and e-commerce. Go through some specific payment considerations, then taxing considerations, then talk a little bit about the international cross-border payment and taxing factors here. They're a little bit different than some of the domestic considerations. Do a little bit of a summary of key takeaways, and then we're more than happy to take your questions and answer them as best we can. And whatever we don't get to, we will follow up after the webinar. So please don't be shy with asking questions here. So the presenters, you've got a great panel of experts here. George Trantis from Avalara, their Senior Director of Global Marketplaces. You've got Anthony Guarino, e-commerce partnerships from Stripe, and Tom McFadyen, the President and CEO of McFadyen Digital. And with that, I'll hand it over to everybody to do some intros of their specific organizations, and we'll get right into the content. So over to you, Tom.
Great. Thanks, Tom. This is another Tom McFadyen. And we have one slide about each of the companies, but 4 facts about McFadyen Digital. First is we've done a lot of big enterprise projects. We also work with mid-size and well-funded startup companies, but we've built a dozen sites doing over $1 billion a year of GMV, and pretty much every dimension of e-commerce and marketplaces that you would consider large or big. We've really pushed the limits on each of those dimensions for a lot of big clients, and as I said, a lot of mid-market companies as well. Second thing to know about us is we've been doing this for a long time. We're very experienced in building these solutions, a third of a century in business, almost a quarter century building e-commerce sites, built a couple hundred e-commerce sites, cumulatively generating tens of billions of dollars of GMV. And really for the past 15 years, we've been focused on marketplaces. Really, that's even before they started really being called marketplaces in the last 5 or so years. But we've built dozens of sites, some of which cumulatively they generate billions of dollars of GMV, gross merchandise value. So very experienced. Third, we're a global team. Onshore folks spread across the US. We have a nearshore development center in Brazil and an offshore development center in India, supporting clients round the clock with good labor arbitrage for some lower cost implementations. And fourth, we're very much on the forefront in terms of thought leadership. We just published a book about marketplace best practices, a 450-page document that became a #1 bestseller in Amazon in the commerce category. We've written a lot of other thought leadership pieces, such as the marketplace maturity model defines the levels of maturity in marketplaces, the marketplace sweet spot report, which is, evaluates the major marketplace vendors, much like a Forrester Gartner assessment, processes for implementing marketplaces, et cetera. So feel free to reach out to us if you'd like to learn a little bit more about marketplaces. So thanks, I'll hand it over to Avalara.
Hey, thank you, Tom. So my name is George Trantis. I spent the last 20+ years in e-commerce and moved here about 13 months ago to Avalara. And, at the end of the day, our job at Avalara is to improve compliance, reduce risk, and, spend less time managing the complex world of tax. So we want to make sure you're focusing on your business. So, we sort of look at tax in the world in these 6 bubbles here, and I won't go through them all, but at the end of the day, there are a lot of jurisdictions that have a lot of unique requirements. So regardless if you're selling a tangible product or a digital product, our job is to simplify that. And we use a very complicated system to do that. But on the marketplace side is how do we make your job easier, simpler from calculations all the way through filing. And then at the end of the day, how do we mitigate that risk and how do we make that simpler for you as a business? And so Avalara has been doing this for about 17 years. We are based globally as well. So we'll talk about some international aspects of this, but most of what we're going to talk about today on the first part is domestic, but this is something that is, as laws change, we update our content daily. So this is an exciting time for tax, as crazy as that sounds.
Thank you. Hi, I'm Anthony Guarino. I've spent the last dozen or so years across different roles, both working with clients to implement marketplaces, and most recently working on the platform side to provide platforms for marketplaces to be deployed. So excited to speak today from Stripe side of things. Stripe has an overall product vision we call the GPTN, the Global Payments and Treasury Network. The Global Payments and Treasury Network is a vast network of integrations to provide money movement globally across Stripe's platform. So we'll talk specifically today around a product set called Stripe Connect and how that helps facilitate marketplace transactions, both for payments accepted and payments dispersed by a marketplace. But overall, Stripe's core business is focused on several key areas. First, the foundation is built on payments and the different ways to accept and disperse and manage payments globally. Then there's payments optimization. Payments optimization is to ensure that you're optimizing your acceptance of payments, you're optimizing how transactions are processed through credit card networks, et cetera. Then we have a suite of revenue management tools to help optimize your own internal systems and your reporting and integrations. And then finally, we'll talk a little bit today around solutions around marketplaces, as well as building and other products that Stripe offers. Stripe's excited today to discuss our marketplace offering. Stripe's actually used by 75 of the top 100 marketplaces overall, including leaders like DoorDash, Instacart, and Amazon.
Well, let's kind of ease gently into the technical topics of payment and tax and architectures, we're going to start off with the fundamentals of the financials of marketplaces. So e-commerce, first-party products have been around for about a quarter century. That business model, it's pretty simple. The operator buys and sells goods, much like in the physical world of retail for millennia. Buy low, sell high. The operator, e-commerce operator, owns the goods. In a marketplace model, the marketplace operator is really an enabler of transactions of third parties. So it's actually the third-party seller that sells the good to the customer. So that has a lot of implications in the payment and tax element, and that's where Stripe and Avalara come in to help solve those challenges, which we'll talk about in the next couple of builds here. So the financial model of e-commerce is you buy from your supplier for $P, and you as the operator, e-commerce operator, set the price that you want to sell it to the customer. You buy it at cost $C from your supplier, and your margin is the delta. Buy low, sell high. Your margin is equal to the difference between the price you set it at versus your cost. On the opposite side, the marketplace model, the price is actually set by the third-party seller, and the marketplace operator generally makes typically a majority of their revenue from the commission fee, and the gross margin is actually a percentage. So if it's 15%, 20%, 10% commission fee times whatever price the seller has set on their products, so you get your margin as a percentage of the seller's price. And there could be sophisticated commission grids and so forth for calculating that. And just as you hear some terms, in the e-commerce world, the gross merchandise value and the revenue are generally the same. It's what the customer pays for goods. On the marketplace model, the price set by the seller, the total volume that goes through the marketplace platform, is called the GMV, and the revenue is just the commission fee. So the tax nexus, and this is a simplified statement here, for an e-commerce operator is based on where the operator has operations, so where your distribution center or your headquarters are, and where the customer is, there's a calculation of tax based on that. But in the world of marketplaces, one of the main factors is where the seller is based. If you have dozens, hundreds, thousands of sellers, you need to track the sellers, and they may have multiple nexus points as well, and the customer locations. Again, that's a bit of a simplification. There's some other factors that go in there. So you can also have hybrid marketplaces. A lot of sites, like, pick the big giant, Amazon, sells their own first-party goods that they stock and third-party goods. So you have to combine the payment and tax logistics of both of those. Plus, you may have optional drop ship, which is yet another tax calculation mechanism. Plus, you may have additional factors, which, different categories of goods have different tax rates, different states, counties, cities have different taxes. There may be tax holidays and certain minimum thresholds upon which at a state you have to start paying taxes. So there's a lot of business logic in here, and that's where Avalara and Stripe are going to help come in and solve those problems. So on the next slide, we'll just talk about, in marketplaces, there are lots of ways in which they generate money. The commission, typically, as I mentioned, a percentage of the gross merchandise value sold by the third-party seller is the main revenue source for many marketplaces, but there can be subscription fees for sellers or for buyers, listing fees. Advertisement is a big opportunity for marketplaces, fulfillment services. But what we're really focusing on this webinar is the sales tax calculation around the goods that are sold. And from that good, we have the commission removed. And of course, the different CapEx and OpEx elements, but we're not really digging into that on this presentation. So the next slide, I'm going to give you kind of an overly complex architecture diagram of what a marketplace architecture looks like. Generally, you have a e-commerce platform on the top, and you have a marketplace platform on the bottom. And that could be, for example, a Miracle as the marketplace platform on the bottom and Magento on the top. There are other approaches like VTEX has combined commerce and marketplace in one platform, and a number of other platforms. These are all, we have an assessment of those in our marketplace sweet spot report. But if we click forward, let's focus just on the payment and tax, the purpose of this webinar. So at checkout, obviously we need to collect payment and start on that payment process. And George and Anthony will go into more details on this. We also have to calculate taxes. And again, we may have mixed carts that have products from multiple sellers with multiple shipping from multiple states, plus first-party goods in one cart. So calculating those taxes can be quite complex. After checkout, we have order status, of course, wanting to check those. And depending on regulations, especially international, the charge to the credit card may happen at different points in time, whether it's at order placement for a hold or for shipment or for receipt by the customer. Again, varying regulations around that by country. And then at the bottom right, we also have payments to the vendor, which is in the reverse order. Again, it's the third-party seller or vendor, third-party vendor that's selling the good. So if it's a 20% commission fee, then 80% of the gross merchandise value, the price of that product goes to the seller. So we'll get into the process in some of the next slides, but let me hand it over to talk about the payment flow next, or talk about some of the tax laws. So George?
Yeah, so as this slide's building out, you can sort of just see the progression of marketplace facilitator laws through different states. So, it started with Washington in 2017, moving all the way through 2021. Now, Mississippi and Louisiana are not highlighted blue there. They actually passed like literally days after I made this slide last year. Florida has got legislation in the House bill about marketplace facilitators. And I think there's a question in chat about when you should charge tax. So like one step above marketplace facilitator is the South Dakota versus Wayfair. And a lot of people combine them. And so, marketplace versus South Dakota versus Wayfair is about economic nexus. And 43 of the 45 states that have sales tax have some sort of specific dollar amount or order total where you have to collect tax. So there is those laws. So if you're in Florida, which doesn't have marketplace facilitator, there are other laws that may apply. So you're based in Florida, you're doing $1 million to Washington State, you may have a nexus there where you have to collect tax. As a marketplace, as we sort of look at what these laws, meant and did to the business, it took the tax from the seller and moved it into the organization. And so there are a lot of businesses that had to make some changes. So eBay and Amazon being the largest ones basically said, we've got to take this tax burden. They had their own little tax portals in there. A seller would say, I'm in these states, here's where I'm charging tax. And it moved it from that seller to the marketplace itself. And so it streamlined it for the businesses. And so there were some advantages to the sellers. Obviously, there's a lot more work for the marketplaces. And this is where Avalara sort of comes in and simplifies it. So, we can take items with, eBay at the largest scale, which, we don't manage specifically, but they have billions of items all the way down to your smallest marketplaces. And we can determine a single item, what that tax should be in any jurisdiction in the United States. And in most of the world. And so that's sort of where the burden comes in. Let's switch sides here. We'll sort of look at it was before. So this is sort of a very simplistic view of how a seller in a marketplace worked. The seller was responsible for the sales tax for the most part in the states they were in. They managed some of the restrictions. They did the fulfillment, and the marketplace handled the payment and the actual platform. And for the better part of 20 years, that's how it worked. 2018 came in, and fast forward to the next slide here, and we're seeing that the seller has a lot less responsibility. And it's partially what's driving some of this marketplace growth is, the sellers can put their products in a lot of places, have a lot less worry. Now, the individual marketplace is responsible for a lot more things. And so when we talk about domestic, platform restrictions aren't as big, but as you talk about global, can you ship something that is, a Brooks Brothers shirt has a mother of pearl button? That's restricted in a lot of countries around the world. So those are things that the marketplace may have not have thought about in the past, but now has some responsibilities. The payment has always been on that side, but the state, local, and international taxes really has been a challenge for some of the larger ones because they had to change their fundamental aspects. And so we look at, Avalara is built around a tax code system. We've got thousands of tax codes that cover every sort of item along the path. And I think that's something that makes it easier. When you get to a marketplace, what's the best way to handle that? That's something that we can talk about as we get into each ones. And then at the end of the day, the returns and filings. And typically it's, one return per state is sort of how a standard business handles this. Some states, 4 specifically, have created multiple laws and multiple returns that are required to file into then 1P or 3P. I see some questions about CBD and THC. Those are some pending laws on that in every state. So we have an excise team that handles some of those specific questions. I am more than happy to pass those on to the experts there. But we are working on vape content actively right now. That's a popular one, and we're working on some other specific ones. But tobacco. We can handle most content all the way through fuel and things like that at Avalara. So that's sort of that. And then this is sort of how I visualize this. Now, the left side is the things that happen on a marketplace. You're going to have customers that have a tremendous amount of bad data. So for anyone that ever bought on Amazon, they own the data, they own the marketplace. It's a really good experience. But then you go to an eBay, and it's the Wild West. If you go to a Wish, you got foreign sellers trying to write in English, and you get some really interesting things. So that's always one issue: is how do you take this data and move it into a useful format for marketplaces? So when we think about our Avalara tax codes, we basically say there's ways you can do this fundamentally easy or hard, and we look at that as, do you map at the category, subcategory level, or do you go to the item level? And that's a decision that the marketplace has to make with their tax advisors. And there's no wrong decision, just about how you want to handle it. Returns, those things are, marketplaces have as high as 30% returns, some a little higher depending on the categories. From a tax standpoint, you've got to get credits for that. So our system natively handles that. So if the sale happened in January and it's returned in May, there's no struggles there. You get a credit back in that month. Omni-channel is the way we are living today. So Avalara's got 800 plus connections to different ERPs and accounting systems. We've got support through a bunch of different marketplaces, from extractors and tools, so you can bring data in from a very number of sources. And those are the things that are going to simplify that for the customer. And then, as we think about the growth of e-commerce, cross-border has always been ahead of as a percentage. It's a smaller base, but ahead as a percentage. And so Avalara in the last couple of years has bought multiple companies to help us with item classifications from the HS side, and also duty and the ability to provide duty basically globally around the world. So as a marketplace, do you want to create this sort of seamless experience for a customer anywhere, from anywhere to anywhere? And you can do that with our system. And then reporting, because a lot of the laws have been created to make sure that the governments are getting more tax, and there's been this tax shortage in in COVID and, you know, in around the world, VAT gaps and things like that. One of the key parts of the business is we have the ability to bring data in from a lot of sources, tag it to a merchant level or your own business. And that allows you to then report back to the customers what was collected and have those gross sales / taxable sales that they can trade off. And then on the right side, this is really a very simplistic model of where we are today. You know, call it 3 years ago, the sellers would have some responsibility here. But really, if you're a marketplace and you're trying to grow the business, you know, the easiest way is I want to collect tax in every state I can, and I want to do all the work I can for my sellers. Now, an accountant or the controller might say, I don't want to have that risk. And they might want to say, I'm only going to collect it where I have nexus or where I'm required to by law. And that's okay. And you just have to create another system that allows the collection and the pass back of tax to that seller. And that's where, you know, I think this is a good segue for Anthony. This is where where Stripe allows some of this content to happen. And so at the end of the day, you know, I gave a very simplistic view of how a marketplace can do tax, but there is, I wouldn't say a million options, but there are thousands of different sub-variants of marketplaces: digital, B2C, B2B. You know, we're seeing some odd ones now, B2B2C. So we've got some new things going on here that are changing the world. And Tom, you'll probably agree with this, but marketplaces are sort of driving they take an opportunity or a weak point in an economy and they really capitalize it on and expand on it.
Absolutely. And transforming every week, every month.
Yeah. So this is a great segue to go into how payments work.
Thanks, George. This is an example here. I think Tom described it as a hybrid model where you'd have both first-party and third-party inventory available via a single checkout. I think, you know, from our point of view, that's the Amazon experience, and I think one that is highly optimized for the consumer. I think that's first and foremost when we think about payments on a marketplace. It's optimized for consumer, optimized for conversion. Don't optimize for your business, because you're trying to grow a marketplace. Typically, we see a marketplace that does have a hybrid approach here. And you know, if you're not fully investing in your marketplace experience, you're definitely going to see limitations around growth and the limitations around consumer conversion. So I'll walk through the hybrid model here and how payments work in that type of flow. There's really three key segments here. First, you have the money in. So that's the buyer making a transaction to the marketplace and the marketplace having a checkout. Obviously, in this example, the product will include, or the checkout will include products from two third-party sellers and one first-party product. This is where things get really complex on the payment side. Collecting a transaction is one part of the puzzle. Obviously, depending on the tax rules and some of the things George talked about, you know, we don't want to oversimplify the money in process, but some things to think about from the payment side is, again, optimizing for conversion. How can you think about those friction points for the consumer to maximize your checkout conversion? Some things to call out are, you know, the different payment solutions you offer, the different payment methods. Do you offer PayPal? Do you offer Apple Pay? Do you offer different wallet considerations there that they're typically more prevalent in a B2C consumer marketplace? Also, how do you think about fraud in this process? This is where you're going to see fraud occur is credit card fraud on the consumer side. Second, you have moving money. So you see where the marketplace is essentially now deciding and has logic built around how to split that transaction. In this case, splitting it across three individual parties. Your first party transaction, then segment of that cart that goes to the first party, and then splitting the transaction across funding to two separate third parties. This is where a lot of the regulation and complexity around a marketplace happens, is that third party split. I'll talk a little bit about that in a moment. But essentially in this move money phase, you are routing portions of the payment across to multiple first and third party accounts. And that creates a lot of additional complexity for you as a marketplace seller. And then finally, you know, moving money out. We'll talk a little bit about this in the onboarding step here. So when onboarding a seller to a marketplace, there's a few important considerations that are very unique from a standard e-commerce transaction. First, you are now responsible for what's called know your customer, or KYC. KYC is a mandatory process. It's something that puts you in the scope of regulators when you start being a marketplace facilitator. It requires you to identify your sellers. It requires you to know information about the business entity behind your sellers, and it makes you liable in certain circumstances for the actions of those third parties. So it's a very important process. It's probably the most critical process up front here, and it's the one that oftentimes is most poorly managed. KYC checks can be costly and manual, and making a mistake here can be even more costly because it puts you, again, in the scope of regulation. This is not a simple background check. It's much more than that. It's really focused on compliance with individual laws, both locally, nationally, and as well as internationally, depending on how you sell. Second step around verification is OFAC, which is essentially checking against the terrorist funding. And this sounds simple, but there's a lot of complexity around here. You think about over the past few years, we've seen sanctions and regulations changed around certain entities, and of course, sellers within those entities are going to see different compliance too. So you obviously couldn't have a marketplace with sellers in North Korea, for example. This is the type of regulation that's going to be considered there, outside of just standard know your customer. And then George can talk a little bit more about tax, but there is definitely tax implications up front when onboarding a user or a seller. And you're going to have, depending on different amounts per region and per nation, you're going to have different IRS facilitation rules there. And this is where Avalara really handles as well. There's also additional checks within Europe around anti-money laundering regulations. We'll talk a little bit about that later. And then the card networks themselves, if you are accepting credit cards, as most would, have their own blacklist and filtering rules as well that you have to consider. So the verification process is very critical up front. There's many things to check there, and depending on the scale of your marketplace and the scale of your sellers, there's additional complexity to consider. Final point on this is an ongoing, just like tax, it's an ongoing process. So it's not a one-time process. You have to remain in compliance, and non-compliance here can shut down some even large marketplaces. So it's a very important step to consider. Next, we'll talk a little bit about actually accepting payments. So accepting payments, that pay-in process after you've onboarded sellers. Some things to consider here that are unique to a marketplace. You want to consider consumer or customer-friendly payment options, depending on the products you're selling. If you're selling apparel, you're going to want to offer all sorts of consumer-friendly payment solutions on that pay-in process that I showed. If you are going to have a highly mobile marketplace for B2C, you're going to want to have Apple Pay and Google Pay and other mobile wallets there. And then if you're selling internationally, you're going to want to have specific payment methods for that region. It's oftentimes US sellers don't think when expanding internationally, not every region is a card primary region. So some individual countries, even Germany, majority of transactions are not processed on credit cards. So you have to consider what those consumer payment methods are going to be and how you can support those on your front end marketplace experience. And then finally, for a B2B marketplace, there's a whole set of bank debit and credit schemes that are important to consider. Are you going to offer ACH transfer in the US or SEPA across Europe, which are going to be more applicable for a high volume, high ticket price B2B marketplace. From our side of things, we've really focused on unifying the payment stack, and I think it's important to consider. There's a lot of things involved in payments in marketplace. You have the seller onboarding, accepting of payments, and then paying out to sellers. And you want to think about how you can simplify your stack as much as possible. Having kind of a Frankenstein monster here to scale makes it really complex when you're scaling internationally on a marketplace, which is how you can really maximize your revenue overall. You want to think about integrating fraud protection into the front end of the marketplace, of course. And then the more simplified you can be on your monthly accounting process. If you are a hybrid marketplace and marketplace is not your primary method of revenue to start, you're going to want to have as simple of accounting process as possible and not create additional complexity for your team. And finally, just to call it again, shopper checkout on that multi-party payments approach. If you don't have a single payment provider, you'll often see a marketplace that requires separate checkouts for first-party and third-party transactions. So think about how you can maximize your average order value, how you can simplify that, and how you can have the best checkout experience for shoppers. And then finally, we'll talk a little bit about how you pay out and how you make commissions on a marketplace. So a single payment solution can do all of this for you. But you're going to have to think about linking bank accounts into your onboarding experience. So how do you verify that? How do you go through micro deposits or a solution like Plaid that's going to verify bank accounts dynamically? How do you manage marketplace commission? What's your commission structure? These can be highly complex. Oftentimes you'll see something like Amazon or eBay is going to have commissions based on the type of listing, the length of listing, or the category the product being sold on. But these are all important considerations when you're paying out, because this will factor into how you pay out to your sellers. And then from a managing risk standpoint, this is really critical to think about when you have returns being processed through your marketplace. Certain categories are going to have a higher risk than others. Selling a t-shirt is much lower risk than selling fitness equipment, or something that has a higher order value might have a different return window, a different return process. And you as a marketplace, you're going to want to think about how that factors into how you pay out your sellers. Do you hold balances in escrow for certain categories or for all sellers? Do you pay out things when shipments have been fulfilled? And then also, who's the merchant of record for marketplace transactions? There's a few options to consider here, and a marketplace might have different merchant of record approaches or business of record approaches depending on their individual nexus and global nexus. And we'll talk a little bit about that later. Great. So from an international standpoint, we talked a little bit about the regulations, but moving from a single marketplace entity to a multi-entity marketplace that has a nexus in multiple regions, there's a lot to consider. And some of the different rules we talked about get to be very complex there. I guess in short to think about it is, as you expand, you're going to expand your seller reach as well. And you're going to have different regulations across different regions. The two main ones to think about are FinCEN in the US, which is overall about customer due diligence. And then across Europe is the AML, or anti-money laundering directives. Both of these are intended to really shift some of the rules around compliance to the marketplace from a payment standpoint, and to make sure that a marketplace or third-party transactions are not used for money laundering or other non-intended consequences there. And then one important point to consider when to simplify regulation when expanding internationally is you do have the option often to, if you don't have a local entity, say you're a US marketplace now setting up a separate marketplace within the UK, you have the option of shifting merchant of record from you to the third-party seller. So you'll see this how Amazon will typically scale internationally is you can have a smaller global footprint. Now that means that you're shifting some of the risk around fraud and shifting some of the risk around returns, but that means that you can more simplify your international scale if you are to expand your marketplace. And then finally, how you move money internationally. If you are a single entity marketplace and you want to be able to transact globally or have sellers globally, think about how to reduce your foreign exchange fees. In that payout step that we talked about, you could incur fees based upon the money or the currency you've accepted in and the currency you're paying out in. And how do you minimize that to maximize margin? And then at the same time, for international shoppers, how do you present in local currencies? How do you simplify that process to make sure that your UK customers are transacting in pounds and your EU customers are transacting in euros? And how do you simplify the overall exchange that will occur as you pay out to those sellers? Great. Now I'll turn it over to George to talk about international taxes.
Yeah, so I think this is a great lead in. I think the world of marketplace facilitator in the US has spurred some of the changes in the EU and in the UK. Obviously, so there was deemed supplier is the name of the law. January 1st, it happened in the UK. July 1st, 2021, it's affecting the EU. And they basically simplified the law for marketplace facilitators. Basically, if it's a website that has terms and conditions that are being controlled, and even if the price is not being set by the seller, there is some potential deemed supplier things. So drop shippers could fall into this, and there's a lot of minutia here. But what makes it really different is they set price thresholds, and this is where it gets very complicated for the sellers in the marketplace. So 135 pounds or 150 euros is the threshold. So everything below that is responsible for the marketplace. Potentially above it is the seller. But where it gets interesting is the terms they use is it's not on the checkout, it's actually at the consignment level, so the packages. And then you get into some nuances with these laws with, are you storing the product in Europe? Are you shipping it in? So there's a lot of complexity here for one slide. Richard Asquith, who leads our European tax, has got some great pieces on this. He spent the last 18 months delving deep into this topic. It's still unfolding with explanatory notes from different countries. And this law will evolve over the next 2 years. But moral of the story is, as a marketplace that maybe was only selling in the US, low dollar or high dollar, that had some sales that leaked out into different countries because they thought it was it was okay. There may be some increased requirements. That may be registrations required for your seller to that know your seller part. It's no different. The EU wants to know who these sellers are coming into the world. They also eliminated that low value exemption. So 15 pounds or euros for duty free is now gone. Tax potentially in certain countries is going to be what they call live tax. And so these are all things that are supported by Avalara. And this is where we have to have a conversation with your tax advisors or yourself to determine what you guys want to do as a path. And at the end of the day, there is no right or wrong path. This is one of those ones where we can simplify it for the business. We can create complex rules that say above these thresholds that the marketplace will not be responsible and the seller needs to report. But this is really an interesting just dynamic. And then there's countries like India that require HS codes. So basically, how do you solve, they were trying to figure out how do you solve tax and duty. And they realized that the HS code is sort of this, which is a global classification for World Trade Organization, the first 6 digits, allow them to sort of simplify this. So it's something our system can do as well. And then as we move into the future, we're going to see a lot of other countries sort of try to figure out marketplace facilitators, because there's a huge gap in tax around the world from large businesses, or even, maybe Alibaba or Tmall coming in and trying to import that. So our system can solve this for you, simply and effective. It does require some, consultation between tax advisors and us to make sure we get the best methodology. But it is something that we've been building for and building on over the last 2 years.
Great. Thanks, George. So this subject may seem overwhelming and extremely complicated and perhaps scare you off from the whole concept of a marketplace. But the reality is that with partners like Avalara, Stripe, and McFadyen, we can help you overcome these challenges. And we've done so many times. In fact, Avalara, Stripe, and McFadyen have worked together on many projects and successfully launched many marketplaces. So a lot of the complexities and details are taken care of by the platform itself. And certainly there are advisors from the 3 organizations to help you with some of the business decisions and financial or technology decisions that need to be made in the journey of a marketplace implementation. So let's hand it over to Anthony to talk about payments key takeaways, and then George will talk about tax key takeaways. Great,
thanks, Tom. So we talked a little bit about seller verification. It's probably the most critical step upfront when expanding to a marketplace. You have to be very thoughtful about the regions you'll be selling in and the type of information you collect up front. A part of seller verification is KYC. KYC in of itself is it's not a single regulation. It's more about the compliance that is required by you to accept credit card transactions. So think about it as like really shifting compliance from the credit card networks to you, and requiring if you didn't want to accept credit cards, you'd have a different set of protocols. But of course, it'd be really hard to transact online. So there is separate regulations within each region, and we talked a little bit about those though. Simplifying the complexity overall, it's best to have a single global provider and a single provider across both the front end and disbursement, or front end and back end payment flows that you have to consider on a marketplace. We've worked with a lot of customers of McFadyen that kind of try to make a go with different providers for first party and third party. And ultimately, there's a lot of scaling challenges to consider there. And it creates a subpar consumer experience around having separate checkouts for both payment solutions. And then expanding internationally, there's options around how to do that and how to shift some of the liability to your sellers if you don't have a local entity within a region. And then finally, how do you manage risk overall with smart rules around disbursement or payouts to make sure that you as the marketplace seller are not left holding the bag in returns or fraud that might occur for high risk categories. Now I'll turn it over to George from the tax side and key takeaways.
Yeah, so when I talk to marketplaces, and we're managing over 200 marketplaces at Avalara, the first thing I always ask them is like, what are your goals? And so, how do you onboard sellers is usually the most important thing for them. So that is the catalyst that's going to drive their business. So, we've simplified this with, how do you establish your tax profile in those first calls we have with them? How do we make those things process easy? One of those is, product catalog. Let's make sure we're applying the tax code on your side and not driving the customer to do that. And so I always think about it, if you remove the customer from the equation and just tell him to list his products, he will list them a lot faster. And then from the tax side, so the sales and returns, we simplified that. We have real-time tax lookup. We're built in the cloud. We have a whole series of tools that make this really simple for you guys. And then the filing and remittance. So from a marketplace or a 1P, 3P, or this combination, we have a team that will make sure the taxes are handled properly and where you need to file multiple returns and not. And then there will be a time, depending on your size and scale, an audit will come up. And so we have, an audit guarantee and some defense and some full trackability. So if it's a tax holiday weekend and no sales tax was charged, we'll have the date and timestamps of all those transactions to really simplify that and make your controller or your chief financial officer happy.
Great, thanks, George.
Great, thanks, George. So now we're that's the regularly scheduled portion of our program, if you will. Now we actually do have a lot of good questions here that came in, some anonymously, some not. But feel free, if anybody has anything that they would like to ask right now, please type it into the Q&A box, and we'll pick it up if we're able to. And if not, like I said, we'll be happy to follow up later. So the first one, I'm going to direct this to Tom first, and then guys feel free to chime in. But this was a good one. When it comes to the various considerations and configurations that you've been discussing, what usually needs to be changed from a payment and taxing perspective going from first party to third party?
Great question. And that ties into what Anthony said about companies with existing payment service providers and saying, well, can I just use the same one? Or can I use the one I use in my brick and mortar store for my marketplace? We've seen that actually delay projects quite a bit and end up with a lot of frustration and ultimately reverting to, in I think a couple cases, to Stripe for payment. In one unnamed, I'll keep unnamed payment service provider, big one, had several hundred pages of contracts that they wanted our client or mutual client to sign in order to avoid the KYC, know your customer, and AML, anti-money laundering, liabilities, pass all that on to the marketplace operator. So ensuring that the payment processor, payment partner can handle all that and those unique requirements of a marketplace. Stripe is pretty uniquely equipped to handle that based on their business model. And same with the taxes. We mentioned checkout of carts that may have first-party goods and third-party goods from multiple third-party sellers, perhaps even being shipped to multiple addresses. That level of tax calculation becomes extremely complex, and having the right partner that can handle those scenarios, plus handling returns and in situations where you have to do escrow and payments back to the third-party sellers, having the right partners that can handle that. And again, just making sure that those unique marketplace considerations are available, which are, again, are very different than first party commerce as we've talked about in this session. Maybe George and Anthony can add on to that.
Yeah, I guess in short, like what Tom said, standard, a lot of standard e-commerce is happening in a payment gateway model. Payment gateway means that you have your own merchant account. You might have a long 5-page invoice of all the different charges you get based on card type. That works well for standard commerce. When you move to a payment facilitation model or marketplace facilitation model, that's where you'll typically find the gateway model breaks down. And it's where you end up really needing what's called a payment service provider, which is what Stripe is. Stripe essentially is its own merchant account, and then you're onboarding through Stripe, which means that Stripe or a payment service provider like Stripe can essentially take on the risk on your behalf. So you don't need to become a marketplace facilitator or a payment service provider, or a payment facilitator. Stripe is a payment facilitator, and Stripe maintains the license on your behalf. So that's really where things break down in that model, and where it's best to have a single provider that can really help stand in front and maintain compliance on your behalf.
And I think from my side, Tom, we've seen several large marketplace, companies launching marketplaces inside their 1P business that have come to a grinding halt when they forgot to include their tax partners. And so, my comment is, if you're the business owner or driving the marketplace at your business, make sure you involve your tax partner early, because there are solutions. It's not as scary as it was 2 years ago. We can solve this quickly with 3 or 4 phone calls from a technology standpoint, and maybe a couple consulting, but we get your tax advisor, we get your tax team and our team, and we show you how we can bridge this difficulty or this gap from where you were as a 1P to this 3P marketplace. And that's the most important thing, is make sure we're involved earlier in the process, and we can solve those problems.
Great. Thank you.
Actually, I'll add one more thought into there is the data harmonization and importing of goods from third-party sellers into the e-commerce platform or the marketplace platform, ensuring that you have the right categorization of goods, which affects obviously the taxation, and that may be even more complex as you go into international shipments, as the example of a shirt that happens to have a mother of pearl button on it. Those details are very important to import into the from the third-party seller into the marketplace.
And Tom, we're actually working on a tool very soon. It's in beta right now, that will help basically take the catalog using AI and help build some recommended tax codes. So we're trying to solve some of those problems for large marketplaces as we speak.
Great. There was also a good question here from Garrett. It was actually one of the first questions that we got early on. And this is related to something I think, Anthony, that you were just talking about. So I'll address this to you first. And he asks, do you have any insight on the changing money transmitter laws for marketplace operators? And I took that as to mean, does a marketplace business need a specific money transmitter license to be like FinCEN compatible, or is that something that you guys handle on their behalf?
Yeah. So just to clarify, Stripe is an all-in-one solution for marketplaces. So you, as a marketplace seller, don't have to get any additional licenses or manage any compliance. It's why Stripe is a preferred solution for marketplaces, because it lets you focus on your onboarding of sellers and customer experience, and it manages everything for you in a single platform. In terms of licenses, there's federal licenses defined by FinCEN, or the Financial Crimes Enforcement Network of the U.S. Treasury. But there's also, like with sales taxes, individual interpretations of laws as well. So I know there's a famous case around California requiring Airbnb to get a California money transmitter license when they were launching their marketplace early on. So in short, it's very much like tax. There's federal rules that you're held in compliance with no matter what if you sell in the U.S. But the larger you get, the more likely it will be that you may be asked on individual regions, and all the more reason that it's better if you can remove yourself from those and operate under someone else's money or payment facilitation license, like Stripe can provide.
And And Anthony, there's also, I'm not sure what Garrett, how the depth of the question, but there's also a change in the relief bill that is changing the W-9 requirement from $20,000 federally to $600 for marketplaces. So there is that law change. I know eBay, Amazon, a bunch of the large marketplaces are lobbying Congress as we speak to try to get that changed, but there's that law as well. So that goes into effect January 2022 for the 1099, 1042 for 2023.
Good answer. Good answer. All right, so this one was actually, this one comes from Connor. This was based on something that Anthony had said, but I'm going to pose it to Tom because I know we see this all the time in our strategy engagements. And the question is, you said one of the biggest challenges facing marketplaces is onboarding new sellers. In your opinion, what solution is available to address this challenge? And I think that's something we see a lot, and especially in the strategy stages and the early stages of building the marketplace. And then guys, feel free to chime in as well. But any insight there, Tom? Tom, you're muted.
Sorry about that. So two aspects of this. One is the seller identification, recruiting, and onboarding, and the second is the seller management. So we've seen that there are different strategies in onboarding sellers. Typically for a new marketplace that needs to build momentum, we recommend high volume sellers that may be able to import, upload tens of thousands of SKUs for you. So your marketplace has a substantial catalog. And then combining that with some specialty unique sellers that may only have a handful of products or a few dozen products, but they're very unique and they have a good story. And it's something you can use an example in marketing your marketplace, both to other sellers and to potential customers. But then the quality process, there are a number of ways of filtering out sellers, and it can be as easy as looking at that seller's rating on Amazon, eBay, or other marketplaces, Walmart. How are they doing? How are they rated on the seller listing page on those marketplaces? And the different levels of sophistication of sellers have different ways in which you'll want to integrate. Some, the more experienced seasoned ones, typically with larger catalogs, will integrate through an API. So that process of ingesting catalog and providing automated order status updates, inventory updates, is all through an API coded in for high performance. Versus the smaller sellers who may use a web portal, a vendor-facing portal from the marketplace to upload an Excel file or even manually enter in some information about their products if they're exceptionally small. Sometimes even coming through vendor aggregation networks like Channel Advisor. Miracle has their own Miracle Connect network of sellers that can be imported as well. And some ratings already exist in those systems, Channel Advisor and Miracle Connect, for viewing status of the sellers. The second part is the managing the performance of the sellers, and the more sophisticated marketplace tools have automated, marketplace platforms have automated tools for checking metrics, both like a carrot and a stick, for suspending or promoting sellers based on their performance. If they're slow in responding to orders, if they're slow in responding to customer queries, if they are late on shipping, if there are customer issues, you can have certain thresholds at which they get suspended or put into the bad boy corner. Or if they do exceptionally well and rate above 4.5 stars, they get promoted and they get 1% less commission fees or get highlighted as a featured seller. So a lot of those automated tools, which become almost mandatory once you start getting to the hundreds or thousands of sellers. And this is one of the things in our marketplace maturity model we call level 4, where you're at that quantitative management, using data and metrics to optimize scale and ensure quality performance of your marketplace. So those are the two elements for me. I'll hand it over to George and Anthony.
Yeah, I think, setting up the process so it's easy, coming from growing up selling on marketplaces. So I started selling on eBay in '99, launched with Channel Advisor in 2003. I understand the world of the struggles of how do you launch on a new marketplace. I remember when Overstock launched, it was one of the hardest things we had to do to get one item there, much less, we had 25,000 live items back in '06. So, and then working at eBay, the simpler you make it, the easier it is. But the tax part, that's what, from my side at Avalara, we actually lost some really large enterprise customers because tax was complicated in the 12, 13, 14 timeframes. Marketplace Facilitators actually simplified it, And you can actually now start recruiting some of these really large Fortune 500 companies to get there because their tax companies feel comfortable knowing that the responsibility is now moved to the marketplace versus them. So that's an interesting change as well.
All right. Well, I'm going to take this opportunity to thank everybody for their time. We're coming up on the top of the hour here, and we do have some questions. We have about 10 questions actually, but we're not answered, but we will be sure to follow up. I don't think any of them were anonymous, so we actually do have names that asked all of those. So we will be following up with anybody that had any additional questions. You will be getting an email following up on this with a link to the PDF of this deck, with a link to the on-demand recording that you can view at your leisure. And everybody here is entitled to a free copy of Tom McFadyen's book, Marketplace Best Practices, the book that inspired this entire series. So that'll be in that email as well. If you'd like the Kindle version, just say so and we'll email you a redemption code. If you would like a physical copy of the book, we have a form that you can pop in, whatever address is comfortable to ship to you. And we'll get that out to you within the next couple of weeks. But again, thank you to the participants, Tom, Anthony, and George. And thank you to everybody who signed up. Have a good day.